Today we are going to be talking about time frames and why time frames are so important when trading. First, it's most important to know your time frame. What time frame are you trading off of, right? Um, that is the first thing you need to understand the time frame that you want to trade off. If you're taking a trade off, this is the Tesla chart off the 10-minute, then that's fine. But then you need to be also looking at the Tesla chart via the daily. See which way the price is actually moving right now. Price is just moving back and forth sideways. So, I wouldn't want to be getting long or maybe long term down here, but you don't want to be getting long this name technically from a technical level. It's not ready to go. Apple, let's look at. Well, that's weird. So we'll go back to Tesla. All right, then we can look at the weekly chart or the monthly we can even look at. And we can see that this is probably a good spot to start nibbling on some shares from a monthly perspective. But from day to day, the only thing you should be doing down here is buying and holding. You should not be trading this. This isn't really the market to trade that. But that's why multiple time frames are important. You're able to identify that. So I can see that price has just been pretty much sideways since 5/12 of 22, right? So nearly 2 months it's just been sideways. So I guess you could play it off these levels up here. There'd be some good trades there, and some levels down there as well. But it's important to understand that large time frame, right? So we understood the large time frame. This is probably a good buy. 4 hour. This is not anything special. This is nothing this is just a chart. There's nothing to it. No substance. So that is why the time frame is so important. But now if we move in, we notice the same principle can be taught on lower time frames, right? So here's a 10-minute chart. And now look, I can see this range. I could play this range on the 10-minute chart. This has been, you have areas up here somewhere where there are sellers. You have areas down here somewhere where there are buyers. So, you can play the ranges back and forth on this on the 10-minute. But you wouldn't see that looking at the weekly, right? You know that the trend is not quite up yet, but it's still technically in a downtrend. It's also consolidating trade back and forth. So, there's might not be a breakout move yet for a few more weeks. So those are just some of the more important things with time frames. It's important to look at all time frames to really just get the full picture of what's going to happen in practice. You almost always want to look at the highest time frame because those are the strongest, right? So I look to start at the monthly, but you can even start later. You can do year. You can do whatever you want to do. But this looks like a great buy area on monthly. And we have the weekly. And personally, I like to trade the 30-minute to 10-minute charts. So I am looking at the hourlies quite frequently. And that's why it's important to look at all the different time frames, because you really need to get a clear picture of what is happening as a whole for the chart, not just within the 5-minute interval, right? In the 5-minute interval, wow, it looks like it's mooning. It went from 655 to 750, a $100 move. That's nice. That's crazy. It's in a bull trend. It's an uptrend. Well, yeah, it's an uptrend on the 5-minute chart, but it's in a bear trend on the weekly chart. So the weekly chart will take precedence over the 5-minute chart. So that's all I have for this video. So thank you guys for watching, viewing, and subscribing. And I will be back with more videos.